Hello traders and investors, welcome back to the Trend Trader channel. So we are just at the beginning of year 2023. So it's going to be a long year, long trading or investing year. In year 2021, we participated in a 10,000 Rand stock trading challenge. We spoke about that, and then at the end of 2021, we came back with the result of how much money we made based on that competition. At the beginning of 2022, we're also planning to continue with the stock trading challenge. We're supposed to trade that thing for the whole of 2022. Unfortunately, we got derailed on our plan. One of the reasons why we got derailed, you saw that we were in a bear market, but also we were busy with other things that didn't allow us to focus on that trading challenge. So for year 2023, we are going back to that trading challenge. We are still going to trade shares using our approach in the stock market. Okay, so for those that are not aware or not familiar of the 10,000 Rand stock trading challenge, I'll be giving an information of what it is about and what we are actually planning to do. Before I continue, I would like to ask those who haven't subscribed to please consider subscribing. And if you find value in this video, please smash that like button. The subscription is important. It helps us to grow the YouTube channel, but it will also be useful whenever we give update on that trading challenge. So what we are planning to do this year, we are not actually trading 10,000 Rand of our account. We are going to use our whole account, but we're not going to share the size of our portfolio. We are just going to normalize everything to 10,000 Rand and then give feedback based on 10,000 Rands. But in this time, we're going to trade our whole account. It's greater than 10,000, but it's not a lot. All right. And then we are using EasyEquities. That is our preferred stockbroker. One of the reasons why we prefer EasyEquities is because of the low commission. But in this case, if you are actively trading, the commission, yes, it's important, but it's not much of a big deal. But we are using EasyEquities. You can use any other platform that you are interested in using, but we are going to be using EasyEquities. If you know what is equities, you can buy shares or you can sell the shares that you own. Unlike with contract for derivatives, which are known as CFDs, you cannot borrow shares that you don't own and sell them in the open market and buy them later to give them back to your broker. So it's going to be a long only approach. By long only means that we're just going to be buying different companies. If we want to close a position, we will then sell the shares that we own. So that is why it's going to be a long only strategy on EasyEquities. At this moment, we are thinking that we should focus only on the top 150 JSE shares by market capitalization. Remember, the JSE has over 300 companies, but they come in different sizes. So if we only focus on the top 150, we know that in terms of volatility is the rapid change in price. So the bigger shares by market capitalization, the companies that have higher market capitalization, anything that is greater than 1 billion Rand market cap, in theory, it should be easily tradable, but also the value of the share price. If the share price is more than 5 Rand, in the case of JSE, most of the companies that have share prices that are above 5 Rand, they are easily tradable. So we want companies that have a big market capitalization, at least 1 billion Rand, and also that have a share price that is greater than 5 Rand, because one company can have a market cap that is greater than 30 billion, for example, but the share price is less than 5 Rand, whereas another company could have a small market cap, maybe let's say around 1 billion, but the share price is above 5 Rand. So there are a lot of factors that are in play when it comes to choosing companies, but we're just going to filter all the stocks using market capitalization and focus on the top 150. One other reason is because our strategy incorporates stop loss, the use of a stop loss. We don't always use take profits, but we always use stop losses. If you are using EasyEquities, you can only put those stop losses or take profit on the top 100 GSE shares. So the shares that are outside, like the 50 remaining shares, we will not be able to put a stop loss. But you also don't want to focus on the companies that are too big, because some of these companies, they may not have the volatility that we want for trading purposes. So we know that the positions that do not have stop losses, it means that we need to monitor those positions on a regular basis. Speaking of a regular basis, we're not promising you a monthly video giving you an update, but we will try to do regular update at least once per month. But we're not promising you that guaranteed you're going to get a video each and every month. And then when we make that video, we will share some of the positions that we took, why we took those positions, how those positions are performing, whether we're making money on that position or the stop loss was hit. Because every time the stop loss is hit, it means that our position will close. It doesn't matter whether we made or lost money on that particular position. Once the stop loss is hit, then that position is closed. The people that saw the video where we gave feedback, at that time we had just above a 50% win rate, meaning that about half of the trades that we took were losing trades. So that is why it is important for us to always use a stop loss. We have a video where we show you how to set up a take profit and stop losses, and to use other order types on EasyEquities. So if you haven't seen that video, we'll leave it in the description. Now back to risk management, because for trading it is important that you manage risk. By managing risk, we are talking about limiting our potential loss. So our standard risk management is usually between 0.5% and 2%. That is the amount of capital we are willing to lose per position. So in this case, we are using 10,000 Rand, and 2% of 10,000 Rand is 200 Rand. It means that whenever we open a position, the difference between our enterprise and our stop loss is going to cover 200 Rand, so that if the position move against us, we're only losing 200 Rand. The reason why we prefer to use 2% is because out of that 100%, that gives us 50 chances to trade. But we're not going to have a fixed 2% risk across all the positions. This is just the beginning of the year. We don't know how the market is going to behave throughout the year. We will be adjusting risk based on how the market is performing, and also based on how the portfolio is performing. So if the market is on a bullish market, we're in a bull market. We're not saying that now we're in a bull market, but if the market turns bullish, we are comfortable with leaving the risk at 2%. But if the market starts to move sideways, then we can reduce that risk maybe to 1.5% to 1%. And if the market happens to turn bearish, then we're gonna lower our risk to about 0.5%. But 0.5 is too small, it's too little. But anything greater than 2% risk, it's too much. You don't want to risk more than 2%. Now, how do we calculate this 2%? I've already mentioned that our trading capital is 10,000 Rand, and 2% of that is 200 Rand. So if you buy something that cost 100 Rand and our stop loss is at 90 Rand, it means that per share we are going to lose 10 Rand per share. So if you take 200 Rand, you divide it by 10 Rand, we get 20. It means that for that particular company, we will be buying 20 shares. It doesn't matter what is the share price. In this case, we said it's 100. So if you buy 20 shares that cost 100 Rand, then you can do the numbers to see how much money we are going to invest to buy that company. But once the position is closed for a loss, then we're only going to lose 200 Rand. We're not going to lose more than 200 Rand. Another thing that we need to fix, we're only going to trade whenever we're getting A-grade setups based on our approach. There are setups that you consider to be A-grade. We're not just going to take any random setup. We're also not going to trade penny stocks. We're also going to use a different time frame. We're either going to use a daily chart or a weekly chart, so that we don't get a high frequency trading. There's nothing wrong with a high frequency trading, but remember, we pay a commission. So every time we get in and out of the market, that means that we are paying the broker. So by trading, reducing the trading frequency, then we can pay less commission to our broker. But also we're busy with other things in life. It's not like we are full-time traders or day traders. So it is important that you also allocate time for other important things other than the stock trading challenge. So that is why we prefer to use a daily time frame or a weekly time frame. So there are only 52 weeks in a year. So that means that can potentially get 52 trading opportunities. But remember, in a week, we can get buy signals from more than one company. So that doesn't mean that we are only going to trade 52 times, and we are only going to trade if there is something that is worth trading. We're not going to rush into buying things, because remember, in the stock market, you are there to make money. You are not there to just be a participant for the fun of it. So it is important that you keep that in mind. So what else am I missing? So I mentioned that you'll be trading 10,000 Rand portfolio. It's more than 10,000, but we're going to normalize it to 10,000. Then we're going to report it based on 10,000 Rand. We are going to risk no more than 2% of our capital to any position that we are taking. Then we are talking about a loss, not the money that you are going to invest per company. And also you're going to focus on trading the top 150 JSE shares. We are using EasyEquities. For the top 100 companies on EasyEquities, we can set a stop loss. So we will be able to set stop loss at least on the top 100 companies. Then for the other 50 companies that we will take that outside the JSE top 40, the JSE top 150, then we will need to constantly monitor those positions. And we'll be using higher time frames, either a daily chart or a weekly chart, so that we reduce the trading frequency, because we also want to control the amount that we are spending on commission, and also it will help us to free some time. So this is just what we are going to do. Like I said, it is important that you subscribe if you haven't subscribed, and also click on that bell notification so that whenever we give update, you don't miss those videos. We already have over 1,000 subscribers on our YouTube channel. We can post things under the community tab. Sometimes instead of making a video, we can just easily take a chat, post a chat there, give a brief description of what we are talking about in that chat. So that is why it is important that to subscribe, because it's only the subscribers that can actually access the community tab and then comment there and see whatever that we are posting in there. So that's it for today. We will constantly be giving you this regular update on what is happening with our 10,000 Rand trading challenge. This year we are a bit empty. We are looking forward to it. 2022 was a bit of a challenge. We had a lot of things to focus on, and then we started to drift away from that challenge. That is why there were no video update on that. So we will see you and give you those regular update. That's it for today. We will see you in the next video.